Nobody rings a bell at the top of a market. Anyone who says they can time it is selling something. But bubbles do tend to leave the same fingerprints, and those are things you can actually check rather than feel. We track 6 of them, based on a framework from the investor Ray Dalio. Any one on its own means very little. The framework only treats it as broad-based bubble territory when most of them flash at the same time, which is a much higher bar than a scary headline. The Buffett Indicator compares the value of the whole stock market to the size of the actual economy. Implied growth asks how much future growth today's prices already assume. New buyers looks at whether inexperienced money is flooding in, which historically shows up near tops. Right now, that third one is notably calm. Sentiment measures greed. Leverage tracks how much borrowed money is in the system, because bubbles are usually funded with debt. And the AI CapEx reading watches how much money is being spent on one single theme. Several of these are reading hot today, which is worth knowing, and is not the same as a prediction. Here is what it cannot do. It cannot tell you when. Markets can stay expensive for years, and plenty of people lost money betting against a bubble far too early. It will never tell you to sell. It tells you what conditions you are investing in, which is a completely different and much more useful thing. Every number here is on the page, with the date it came from. Smart charts. The stock market, explained in plain English. Nothing here is financial advice.